All right, 6:30 time. Firstly, I want to thank everyone for joining us tonight. As you know, we've been working tirelessly to try and find solutions for your questions through this crisis. I know you're all getting emails from everyone you've ever shopped from right now, including us, and it's just delete, delete, delete. It's getting old, I get it. But our top priority has been to serve and support yourselves as business owners right now to ensure that you're keeping safe and your businesses are running where possible. Right now, there's never been such a crucial time for getting the right advice and strategies on how to survive and succeed in these moments of uncertainty. Who's made a decision before out of fear or excitement? Just done a workout and woo, you're the yes man. Had a bad day and snapped at some poor woman at the checkout or beeped your horn in backed up traffic? I know I am guilty. The roller coaster of life and the impulse decisions are the ones we want to help you to avoid before having the right information. We want to see you come out better and bigger on the other side. But in order to do so, we know it's vital that you have put the right steps in place and have the right information to do so. That's why the Camtech and Slater team have collaborated and created this content for you and sought out the required experts to answer all your questions to give you the much needed support your businesses need right now. Thank you to all the teams that have donated their time to create this content for you, including my own. If you're watching the news, then you know right now the changes are being made by the hour, and we have taken our time to ensure we get the right information for you. Tonight, you'll hear from 4 experts in their field, and we encourage you to stick around to the end for a Q&A with Dylan and Zoe and let you know what else we have for you. All right, let's jump straight into it. Who's missing structure right now? I know I am. So here's an agenda of what to expect this evening. For most of you, your first point of call is your accountant. So tonight I'll be discussing the big questions around the stimulus packages, how these link in with building your war chest, tax planning, and the importance of understanding your cash flow and what to do once you've nutted all of this out. You'll next hear from Benz from Unlocked Finance. Sam's a mortgage broker and works with multiple lenders, and we'll be discussing what it looks like for you in business with lending right now. He'll be covering what banks are funding, where you can turn to for deferral of payments, and what we know so far around the bank secured loans of up to $250,000 and where to go to for the government loans. Abbey Gough from HR Sorted will be responding to all of your HR concerns. She'll be discussing the 3 whys: government, employer, and employee, and pointers on how to handle the tough conversations as a leader. Jarvis from Revive Financial will then be taking the screen and discussing the red flags around insolvency. He'll discuss what to recognise if your business is still solvent, insolvency law relief to COVID, options for your business, how to deal with accrued debts and ongoing liabilities, and benefits of an insolvency appointment with Jarvis in the circumstances. Lastly, Dylan from Camtech and Slater will be answering any of your tax questions that you've been sending through to us. Please use the Q&A box and we'll try and answer as many as we have. Some of these topics are going to be extremely dry, but they are so vital right now. So hang in there or use this as your bedtime story. Please understand the time this is created for us to create this for you. The rules are changing so quickly and we are expecting many more announcements, and every business is unique and eligible for different components of the stimulus packages and other tax concessions. And that's why your tax plan, cash flow management can take time discussing with your HR, insolvency and bankers. No one likes a rush job, therefore we have taken time for this for you. Let's jump straight into the stimulus packages. We've had 2 stimulus announcements and we are expecting more to come, like I've said. I'm going to go over as much as possible in the allocated time, so please brace yourself as there are numbers involved. All right, stimulus around boosting cash flow, the 100,000 and the PAYGW. The biggest benefit and confusion right now is around this stimulus package and how this is going to boost your cash flow. It's for employees and their employees' PAYGW. There's a minimum payment of $10,000 and a maximum of $100,000 for employees here. Most of you are probably asking, what is PAYGW? Well, this is your employee's wages tax, and here's an example. Sally earns a gross wage of $1,000 per week. You pay her the net pay of $850. The $150 is the amount you set aside for Sally's tax, and this is paid at BAS time, and that $150 is called PAYGW. How this applies to you? Well, first you need to meet the criteria. You must employ staff, held an ABN as at March 12th, 2020, and continue to still be active. Have an aggregated turnover of under 50 million, generally based on your prior year turnover. Made eligible payments you are required to withhold from, even if you have withheld 0. So that PAYG can be 0 to be eligible for this. Installment number 1. So this is credited as of April the 28th, and eligible employers will receive a minimum payment of $10,000 and a maximum of $50,000. The PAYGW you've set aside from January 1st to June 30 will become a credit with the tax office or reduce your BAS liability. Installment number 2, everything's the same as installment number 1, but you must continue to trade. So if you've closed your business, this may not apply to you, and the payments that you receive will be split. The calculations are dependent on how much you're actually paying your staff members, and again, it comes down to each individual as well. This is where your tax planning comes into play. So what do you need to do to get this payment? So firstly, just make sure your bookkeeping's up to date for your accountant, and your tax planning appointment will be crucial this year, which will explain how this all links further on. Once your bookkeeping and BAS has been completed and lodged, you will see that credit as of April the 28th and thereafter for future instalments. All right, the apprenticeship and trainee subsidy. Firstly, how this applies to you. So you'll receive a 50% wage subsidy, a cashback of up to $21,000 per apprentice, and this will be paid to you in quarterly instalments. Again, there's criteria around it. You must have under 20 employees and they must be an employee from the 1st of March. So what do you need to do in order to be eligible for this and receive your payment? You have to register as of April the 2nd through an ASSN, Australian Apprenticeship Support Network provider. A lot of you that already have apprentices or trainees on your books have received an email. So please follow those steps, or if you get stuck, just shout out. Let's jump into the instant asset write-off. So this is for the small and medium businesses, and the instant asset write-off has increased from $30,000 to $150,000, but I want to make it clear this isn't a cashback. This is to help keep our economy afloat, but all it does is reduce your taxable income for the 2020 year. So unlike the PAYG installment, this isn't going to help with your cash flow. This is just going to reduce your taxable income. So I've got a bit of an example on how this applies to yourself, and so you can visually see what's happening. So we'll go through example number 1, and this is before the instant asset write-off has increased. So you've got income of $500,000. Your expenses are $20,000. Your taxable income is now $300,000. 500 less the 200 equals your taxable income of $300,000. Now let's say you purchase an excavator for $100,000 under the new rules. Previously, you weren't eligible to write this off. Under the new rules, you're eligible to claim the entire $100,000 as a tax deduction in the tax year. So let's go through the same example as before, but we'll apply the new purchase for the excavator of $100,000. Your income hasn't changed, it's still $500,000, but your expenses have increased for the full $100,000 amount to $300,000. 500,000 less the 300,000 gives you a new taxable income of 200,000. So I'm sure you can see here where the tax savings is. Again, there's criteria involved in this. So a turnover up to a 500 mil and your asset must be purchased on or after the 12th of March, and ready to be installed for use by June 30, 2020. So what you need to do, all you need to do is buy a qualifying asset. No rules have changed around what an asset actually is. And like I said before, this one is not for everyone. If you don't have any money in the bank, you don't have any money to spend, and there is no cash back. All it does is reduce your taxable income. On top of this, for businesses with a more than healthy bank balance, assets purchased at a cost of over $150,000 from the 12th of March right up until June 2021, you're able to claim half the cost of the asset outright, and then the other half will be depreciated under the regular rules. Leave that accounting side to us, but just so you know, there are concessions for you if you are purchasing assets over $150,000. Now, there's a lot of other packages announced. We'll go through them briefly, but the ones that I've already stated are the main ones that people have been asking us the questions around and what are going to be applied to your business right now. Times will change as of Monday, I am sure. Okay, so other stimulus packages, each state is offering different options for payroll tax concessions, and there are some cashback advantages, but this isn't for every business. Not every business pays payroll tax. It's nothing to do with your wages tax. It's on top of your wages tax. So only employers who have a gross wage bill of more than $54,166 per month will actually pay the additional payroll tax. Therefore, if you're not paying this, you're not eligible for any of these concessions because you're not paying the payroll tax. And for time's sake, I'm not going to go into the concessions of each state, but get in touch with your accountant and they will be able to assist you there. What else is there? So there's new write-off limits for the small business pool of up to $150,000. This links in with this instant asset write-off. So if you've got a small business pool of up to $150,000 in this current financial year, you are eligible to write that off. Previously, the limit was $30,000. The ATO are also allowing deferral of debts to assist you with cash flow. So if you currently owe the tax office any money between certain dates, you're able to defer your debt there. And that again is linked with your cash flow statement and boosting your cash flow and links to tax planning as well. There's also government secured loans and state loans, which Sam will discuss with yourselves, and concessions to your current bank loans as well. And linked to the ATO debt as well, you're also able to vary previously paid tax, so tax instalments. You may need to apply for this through the MyGov or with your accountant. Tax planning and cash flow. As you can see, there's a few rules above on top of what we've already covered and what is already out there for businesses. Every business is unique, and careful tax planning and structuring can reduce your tax bill, therefore more money in your pocket. And again, no one wants a rush job and you don't want to miss what is out there for you. Tax planning and maximising all the concessions available, such as SBE write-off, small business depreciation pool, assessing your debtors, creditors, stock, super, structuring staff. And on top of all of this, the current stimulus packages and how we're going to best utilise these new rules to reduce your taxable income, build up your war chest and boost your cash flow. Bit of a handful, right? I've probably lost you, but again, most of those tax concessions and rules, leave that to your accountant, but they are all there to help you boost your cash flow. Cash flow. Does anyone know what their monthly rent is? Wages, bills, subscriptions, loan repayments? Do you know what your weekly business income is right now? Do you know which of your products or services produce that income? Do you know what percentage of these products and services are expected to decrease by over the upcoming months? Do you know what your minimum break even is? Do you know what a break even is? Break even. It's the minimum amount of money you need to earn to cover your expenses. Do you know how long your business can stay afloat before running out of cash? For the majority of business owners that come in our doors, a lot of them are stressed out about cash flow until they understand how it works. This is why even more so now, it is crucial. Understanding your cash flow is vital for the running of your business and the reduction of your stress. It sounds like a sales pitch, but this is key. You cannot make financial decisions without understanding your finances. Failing to plan is planning to fail. This is what it looks like to work with us to understand your cash flow. So here on the left-hand side, we are putting in what it looks like before COVID. At the top, have a look at the blue cells. You can see if your sales income was $10,000 over the last 12 months. This is just an average here. Again, we're just looking at the blue cells, and you can list all the averages of all your expenses over the last 12 months before COVID hit us. On the right-hand side of the screen, let's move to the scenario. So over here is where you can put in your percentage of reduction of that you think is going to be impacted. So in this example, we believe we're going to have a 75% sales reduction. Then you can go on, you can assess all of your expenses. Where can you cut your expenses? And out of this is how you assess your cash flow and your different positions. So again, we can run through different scenarios with you depending on what's happening within your business, and it can help you make a better decision on what you need to do right now to ensure that survival, or what you need to do if you need to close down as well. If you do need to go down that route, that's where Jarvis is going to come in and be able to walk you through those steps as well, because that can be a painful process, but if you have the right person by your side, they can alleviate all the questions and answers and stress that you've got involved around that, and they can let you know what the other side looks like as well. So if you are in that, you are facing that circumstance, it is really important to make sure you are speaking with a trusted advisor and you're not just jumping on with anyone on board there. Okay, so for those of you who have sorted out the stimulus packages, cash flow, and your tax planning, now it's time where you can sit back and you can turn and transform your business from where it was before COVID-19 to where it's going to be after COVID-19. Your business, your life, it's all been unplanned, unwanted shake-up right now. Who else has gone traveling and gone down the wrong street but stumbled across the tastiest food you've eaten, or randomly gotten your friends together and had the night of your life? this isn't what's happened here, but now's the time. We've taken the wrong turn and it's time to innovate and transform your business. Let's try and make the best out of a bad situation. We don't want you sitting around idly when you can use your time wisely. So how can you do this? Are you flat out right now? If you are, what are you doing to ensure you're capturing your new market after the crisis finishes? What data are you capturing from your current new market? What are their trends? What are you learning about them? How are you going to keep them in contact after this finishes? Because it is going to finish. Have you made changes to go remote? Going digital is actually key. You don't want to get left behind while others are stepping up. You need to make sure you're aware that everybody is moving into the digital world right now. And I know you're flat out, but you don't want to come out of this and, rules are changing, like we said. You don't want to come out of this and go, oh crap, everyone else is digital. We are nowhere. Are you isolating or do you have free time? And how are you using that time? Are you frozen from fear, or are you taking control of what you can and planning for when the crisis finishes? Use your time wisely, educate yourself, get in front, get remote, get innovative, talk to other business owners that are in the same position as you, follow other business owners that you want to be like. Use your time wisely. This crisis, like I said, is going to finish. Everything is temporary in life. And how do you want to re-enter the market? Bigger and stronger than ever, or are you going to let your fear get in the way? So, like I've said, we'll take care of the tax rules, but we want you to understand that it is quite complicated, and we'll work together with you to help you understand these tax rules, understand your tax flow, and how to tackle the next steps for your business. All right, accounting is out of the way. So next up, we have Abbey from HR Sorted. So I'll hand it over to you, Abbey.
Thank you. I didn't realise I was next, but all good to go. Let me just work out how I can share this screen. 1 sec, that one. And share, I think. Does that work, Kate? Yes, excellent. So, Kate, thanks for having me on, and good evening, everyone. It's an interesting time for us all. So it's nice to have the opportunity to speak to a number of you, I guess, en masse tonight about some of the questions and comments I've been getting as a HR advisor to a number of businesses in the area. I'm based in Oracle, and I've worked with a number of people and know a lot of people, so I've found myself with a lot of questions, and hopefully some of the things I'm going to cover tonight will help you guys to some of those key issues that you may have. So quickly, what I'm going to go through, actually before I do that, need to be really, really clear that this is general information, and of course it doesn't take into account your business's situation. It's not legal advice, and it never can be taken as such. So really careful around taking into account applicable awards, enterprise agreements and contracts of employment, along with specific advice to individual situations. And I can't and won't accept any liability if any of you guys or anyone else that watches this acts on this advice. And of course, if you wish to act upon it, and something from this that you are keen to have a chat about, or you've kind of your eyebrows and thought, actually that's something that I might want to think about in the direction I might want to head in, give me a call and we can talk through the best way to do that, suitable to your business, your individual circumstance. Okay, now that's out of the way. I don't have many slides, so I'm going to probably let you see my face a little bit if you don't mind too much. I'm going to start with the 3 who's, which is what I'm calling it, which is basically whoever's kind of pulling the lever, I suppose. And that might be the government, it might be the employer, and in some cases, it's also the employee. And then with any time I've got left, I'm going to talk just a little bit about some of the advice I've been giving to some leaders regarding how to be a leader during this period as well. Okay, so in terms of the 3 who's, so like I said earlier, the first who is basically around the government. As we've seen, there is a number of instances where the government have forced the closure of a number of businesses. And they've done this through basically saying that exact business either has to downsize, or not downsize, but has to close part of their operations. For example, cafe, no longer providing services or potentially gyms, and anyone that's employed is a very, I guess, technical term. Period the following circumstances. Talk about individual action.
Sorry, Abby, I'm just going to interrupt you just for a second. We're having a little bit of trouble with the connection and we can't hear you at the moment.
Oh, okay.
Oh, but now it's perfect. So continue on.
Okay. How much did you miss, Kate?
Oh, I think we all missed a majority of it. So I might have to get you to start and rewind.
No, I literally have not done anything at this end. So you need me to go back to the very start.
Just this slide, the three.
This slide, okay.
Great. Thank you.
All right, so, okay. I have been repeating myself a bit this week. So, you know, it's kind of not too hard, not too difficult. Okay. So back to where we were, the three who's. First who is the government. Can you hear me, Kania? Yes, no? Yes, I think I'm seeing a nod by Jarvis. Yeah, okay.
Yeah.
Yeah, okay. So yes, the first who is the government, and that is when the government has forced some businesses to close their doors for potentially a number of different reasons, but of course those ones that we've seen so far, things like pubs, like gym, restaurants and cafes. And restaurants and cafes are an interesting one because they've had parts of their operation that they can't use anymore. But basically those guys, plus I guess businesses like the airlines, we've seen a number or a section of their businesses shut down as well. So basically when the government enforces a closure of part of a business or all of a business, basically saying that it's not safe for them to operate anymore, they can utilise Section 524 of the Fair Work Act. 524 talks about where an employer may, under this section of the Fair Work Act, stand down an employee during a period in which the employee cannot be usefully employed because of one of the following circumstances. Now, the first one is industrial action. The second one's a breakdown of machinery or equipment. And obviously that's not, neither of those two are applicable to us here. But the third one is a stoppage of work for any cause which the employer cannot reasonably be held responsible. So we consider that is most likely something that employers can use when the government's told them to close down to basically stand down their employees. So it goes on to say that if an employer stands down an employee during a period under subsection 1, the employer is not required to make payments to the employee for that period. So essentially what that means is that if an employer can utilise this section of the Fair Work Act, they're not required to pay the employee further from the time of the close down or the shutdown of the business. The employees are stood down without pay, and they're stood down without pay, but their employment continues. So essentially they will maintain continuity of employment. They will continue to accrue annual leave, sick leave, and long service leave if they're with the employer for long enough. And again, this is due to a direct direction, I guess, or an order from the government to close down. Now, I guess in this instance, it's worthwhile mentioning that while an employer doesn't have to, they can choose to pay some of their entitlements. So they could pay some annual leave or potentially some long service leave. It needs to be in writing and it needs to be through agreement. So I can't unilaterally enforce someone to take some of their annual leave at that point in time. It needs to be offer and acceptance, basically. Worthwhile mentioning that when we talk about cafes and restaurants and they're able to potentially have that takeaway service, that basically they can just close down part of the business. And that may change. So they might do that for a period of time, recognise that that's not working terribly well for them, and then decide that they want to close down the full business. So you can kind of swap between or change that shutdown or the stand down mandate through time. And I guess the other thing worthwhile mentioning is that within that clause within the Fair Work Act, it talks about usefully and being usefully employed. So there does need to be a test around whether there is useful employment for people within that as well. So we do need to make sure we apply that test. Now, the other thing, of course, is making sure that we're checking our enterprise agreements, if there is one, our awards, our modern awards, and any contracts of employment to see whether there's anything else that needs to be considered through that process. Okay, so that's the government side. That's when the government, as I said, enforces it. But we're certainly seeing situations where employers are pulling levers as well. At this stage, unless the government has ordered a shutdown, it's unlikely that 524 of the Fair Work Act can be utilised by an employer to shut down the business and not pay employees. We're seeing this, and as Kate talked about, this is certainly a moving feast at the moment. Things are changing very, very rapidly, and we're all kind of having to stay ahead or up to date, I suppose, with what's going on. But at this stage, there is only a certain amount of employers that can utilise that. Of course, that means that the other employers need to spend time with their employees talking about the options. So potentially taking some unpaid leave, some annual leave, reducing hours through agreement, all of those through agreement. And if they're being stubborn and they won't allow that, making some staff redundant, okay? And it's also possible, I spoke to an employer today that reached employment with her employees to shut down the business and to stand them all down with that pay. So you can certainly reach the point of agreement around that. And you can say exactly the same as a government stand down or a stand down under 524 of the Fair Work Act, that you'll continue to accrue sick leave, annual leave, etc., and continue on employment. Again, all those things, we need to make sure we do that in writing. We need to put letters to employees. We need offer and acceptance around annual leave, long service leave, etc. But even though we're in the situation where things are changing so much, everyone's feeling this, and obviously employers are feeling it a lot. And if you haven't had a chance to have a chat to your employees about it, now's a really good time to start that discussion. And I think most employers have. I think everyone is, for the most part, we're seeing the best of people through this rather than the other side, which is great. And I think it's been really promising. So just quickly, the last piece is where the employee pulls the lever. And this can be for a couple of different reasons. It could be that in the past week, they're expecting their children to be at school. And obviously, I think here in Victoria, in nearly all schools, that those schools did close and the children were required to come home. So for this week, it's most likely that those employees who were not able to work from home, the employer required them to be at work, and they couldn't be at home to kind of look after their children, could have taken personal leave for that purpose. And that's because personal leave is available to care for someone in an unexpected emergency. And we expect that this is a case of an unexpected emergency. Of course, the preferred state would have been where an employer and employee reach an agreement for that employee to work from home, potentially on reduced hours. I know when I'm working from home, I certainly find it difficult to get in an 8-hour day with my kids knocking on the door and stuff like that, but certainly reaching an agreement about juggling the two. And I think we've got quite good at that at the moment. There's also employees, I think, that are starting to get a little bit less comfortable going to work. And I think that in that situation, again, as much as possible, the preference is for those employees to have the opportunity to work from home. If that's not possible, and it is a workplace where they're required to be on site, so maybe a childcare centre or something like that, and they don't feel comfortable, literally that would be a case of unpaid leave. And in a normal situation outside of this COVID-19, it might be an unapproved absence as well. But in this situation, we'd probably either put the employee on unpaid leave or we would come to an agreement around using some annual leave, because specifically, I'd imagine that 9 times out of 10, they're actually not unwell. Of course, if they become unwell, then they have an opportunity to utilise their personal leave. Okay, and then isolation. So the other thing is, if an employee has to isolate for some reason due to a government mandate and they're not unwell, again, it would be unpaid leave until such time as they may become unwell and receive a certificate from a doctor to confirm that. So there's a lot of information in that, and it can be difficult to kind of cut through detail and to how that relates to your specific circumstance. So again, like I said earlier, take some time to digest, potentially look back on the information I've just provided. And if you've got any questions, feel free to contact me and we can certainly have a chat. The other thing I just wanted to really quickly touch on, and this won't take too long at all, is as a leader, I think it's a difficult. The advice I've been giving to leaders over the last week is, as much as you can, take a step back and slow down. We're kind of all moving at 100 miles an hour, and because things are changing so much, we feel like we have to respond very quickly. And when we do that, sometimes we don't do what the second point says there, which is basically to review our options. It's so important to take the time to review our options and be creative. And like I said, consider paid leave, unpaid leave, the point of a shutdown, or even liquidating your business if you have to. Communicate openly. So start those discussions and continue those discussions and keep talking to people. And even if you do reach a point of shutdown and standing down your employees, continue to talk to them, call them weekly, call them daily if you think it's necessary. And be the leader that your team needs you to be. And I think that's really important. Stand up as that leader, and, there will certainly be times where you need to step away and take some time to breathe yourself, and make sure you do that. And that probably goes on to my last point, which is around resilience. I think we all need a bit of resilience at the moment. We need to take the time to calm our mind and try to catch some of those negative thoughts before they take over. And like Kate said, find those things that we can control. And those things that we can, latch onto them and control those things, because that's going to make us feel much more powerful. Probably look out the window similar about that slowing down, taking some time to actually slow down and think about how we're doing things. And I guess the last thing, pretty simple, and connect with others through compassion. So take some time to actually do those good deeds. It makes us all feel good. And I think these are applicable to everyone, not just to leaders, but particularly for leaders at the moment. It's a hard time to consider that the challenges your business has, and keeping it solvent, keeping it running, so that if you do need to shut down, there's an opportunity that you can come back and you can take up where you left off, and potentially bigger and better than you were before. But it's going to take some work to get there. So make sure you look after yourselves on the way. So that's it from me. As I said, any questions or comments, feel free to touch base. I'm working 24/7 at the moment, so certainly on call as required. But I think now we're heading over to Sam. And Sam is going to take us through some business finance broking.
Abbey, we did have a question pop through on our Q&A. Is that something we're open to right now?
Can do. I haven't seen that. Yep. Maybe we can't hear you. I wasn't looking at that. So there's none there to answer, is there, Kate?
Yeah, so if you go to the Q&A box. And
I can't see any that actually need an answer. Sorry,
as an employer, we are responsible for the health. Are we responsible for the health and safety of our staff and clients? As information changes regularly and recommendations are handed down to businesses, it's hard to know what's best. If acting as best as we can and following legal directions, but not every recommendation, how can we best prepare in case we end up in a disposition one day due to our decisions in this time? So this is around health and safety for staff and clients / patient.
So the advice is that there is potentially some ongoing risks around health and safety, but we're not yet clear about what that is. And I openly and honestly say that I'm not a health and safety specialist. It's enough to keep track of the HR stuff on its own without considering the health and safety stuff as well. But certainly health and safety is a real risk and something we need to be aware of. And I guess the challenge is that this is so unprecedented that we don't have all the answers at the moment. So I would suggest, unfortunately, I can't give too much more than a very general response in that one. But if you need someone from a health and safety perspective to speak to, I've certainly got someone I can refer you on to. That's probably the best thing to do with that one.
Excellent.
Was there any other, Kate? Sorry, they're not coming up on my list there at all.
That's okay. No, that's all the questions that we've had at this moment in time. So straight on to Sam.
Thank you. Can you hear me? Thumbs up or? Yep, sweet. Okay, all right. Thanks, Kate. I'm going to. It seems to have disappeared how I can get my screen now. Oh, hang on, here we go. Share screen. Okay. So there we go. Okay, cool. Thank you. So firstly, yep, I just want to introduce myself. My name is Sam Benz. I'm the owner of Unlocked Finance. We're based in Toowoomba. Been going now for 5 years, and I was at Westpac doing business banking for 5 years before that. And before that, I was in accounting. That seemed like a logical leap for me, but others maybe not. Anyway, firstly, thanks, Kate, for the invite. Really appreciate it. And I know dealing with you always want the best for your clients, so I am very happy to be a part of this. So I really want to give some value tonight based around the questions that I've been getting since 6 o'clock Monday morning. It just hasn't stopped. Slowed down a bit this afternoon, which is great, but far out, it's been a tough week for a lot of people. So I just want to go through some of the things that you can do that will help ease the cash flow, because I agree with Kate that if you are in business, now more than ever, do you really need to work on your cash flow. So I'm going to show you some live examples on how you can defer your loan repayments. I'm going to go talk about if you are one of the lucky ones and you're not suffering cash flow, you're not suffering from business downturn, how you can take advantage of the $150,000 instant asset write-off and how we can help you with that. Thirdly, I'll go into a little bit of depth on the Queensland Government Job Support Loan. And then finally, I'll finish off on some detail around the government-backed unsecured lending that's being proposed and how you can apply for that. Okay, so before I go into depth, I do think there's some really great programs out there. All of the people I'm talking tonight, and this is one of the main messages I want to get across, don't feel like you have to shut your business straight away. There's some really great programs out there to help you, and I hope that what I go through can give you some sort of direction. Okay, so first of all, I'm just going to go open a Google page. So I'm going to show you how, if you've got any loans at all, what do you do? How do you defer those repayments? So most lenders are offering up to 6 months in payment deferrals. And what that means is exactly that. You're just deferring payments. Most are going to capitalise the interest over the 6 months, but it means that you don't have to make any repayments for 6 months. So say, for example, you're with Westpac. I'm just going to show you Westpac payment pause, COVID-19. You just Google that. You can see here, and you can do this for any bank. They are all, most of the lenders, but all the majors have something online. You can do this now. So you can click here. Actually, what was that? No, this just goes to that page. Help for business customers. No matter where you click, you should be able to find a way to get there. And see here, business loan deferral, repayment deferral. And then here, you can just click apply for payment relief. So I've had people that have been on hold for up to 4 hours trying to organise payment relief. You can literally do this yourself in 2 minutes, and they're going through, no questions asked. It's really great. So all you need to do is tick this. There's a few simple questions. Do you want your business loan deferred for 6 months? Yes. Do you understand interest will be deferred and capitalised? Yes. Are you authorised to answer? Yes. put in your details, first name, last name, customer ID, contact number, email address. There'll be a tick box that you understand, hit submit. That's it. It's so simple. And if you can do that, for someone who has, you know, say a fleet of 3 trucks or a heap of excavators, or you've got a commercial property loan, you're worried about the tenants not being able to make their repayments, get in there and just do it. There's going to be no defaults on your credit file, so don't worry about that. There shouldn't be any reduction in your credit score. My only advice with it is once you request it, get something in writing. I'm with Abbey on that. Get it in writing so that if, you know, one of the bank systems that, you know, lodge it as a default, that you can always go back and say, hey, I've got this organised. So this is Macquarie one. They all, look at this, they all have it on their front page. Request a payment pause. This is Macquarie. Very simple. The other one I want to touch, so you can do for your home loan, credit card, car or asset finance. It's so easy, and they're being very, very easy to deal with it. Like they don't want you to fall over. The banks all want you to keep going, so that when this is all over, we can all come out of it stronger than ever. CBA is a really good one. I'll see if I can get theirs up for you. CBA covered team support. So CBA are automatically deferring your, if you've got a better business loan or an equipment finance facility with the CBA, they are automatically, it's on this, they're automatically deferring the payments for April, May and June. So for 3 months, automatic deferral of those repayments. If you want to opt out of it, you can do that. I've been told you can do that on your online banking. And then after 3 months, if you want to defer for another 3 months, then you can contact them directly, or there might be another program that comes out after it. I kid you not, they've been really, really great to deal with. Okay, so does anyone want me to show any particular lenders? Is that okay? All right, I'll just keep going unless someone says otherwise. All right, let's go. Okay. All right, so the $150,000 asset finance instant asset write-off. So where this can help is obviously if you were going to buy a piece of equipment anyway, I wouldn't do this just because it's available. I would do it because you've got a need for it. You're going to buy some sort of equipment that it's hopefully not just going to sit there, it's actually going to be working for you. So if you want to know what your repayments will be, you can go to our website. We've got calculators galore on our website. The one you want to go to is the leasing calculator. So on here, if you want to see exactly what your repayments are going to be, say you want to buy something for $100,000, we're doing 3.99% on anything that's brand new. If you don't want a balloon repayment on it and you want to do it over 60 months, so that would be your monthly repayment in that situation. Generally speaking, you can put a 30% balloon on it, 30%, bring that down to $1,388. So if you want, go to our website, they're free, easy to use. We can do repayments to suit your business, monthly, quarterly, every half year or annually. For farmers, we do a lot of annual repayments because they only get paid once a year, so that makes sense. Okay, now I go to, in Queensland, if you are a Queensland business, Q-Rider, they're offering these, you have to apply for it, they're not offering it to just anyone, but you can apply for up to $250,000. There's no repayment, no interest for the first year. And then they're advertising it 2 years interest only. It's a 2.5% interest rate, and it's a 10-year loan term. Like, it's a seriously good offer from the government. It's designed to help keep people in jobs. So that's what it's designed for. I haven't seen how they're going to control that, but that's what it's designed for. So hopefully no one uses it for anything else. But that's such a great program. I think if someone can borrow money to help them get through and keep people in jobs, yeah, obviously be careful and borrow only what you need. And then there's also the government-backed unsecured business loans. So, for example, CBA unsecured small business. It's not the small business loan. Unsecured. Let's go to government. So you can actually start applying for these. Now they are all major banks offer. Yeah, that one's a little bit harder to find. I've got a link. Hang on a second. So they are all a 250 up to 250,000. They're 3-year loan terms. They are no repayments for 6 months, but the interest does accrue for that 6 months, and then after 6 months, then you do have to start making repayments. I'd be very careful with that one. I know that it can help the right business in the right circumstances, but also after 6 months, if you've got to pay back 250,000 over 2.5 years, then it can be a concern. It is subject to normal banking criteria, so you do have to talk directly to the bank to access it. And we haven't got clear guidelines from the government who's offering that yet. Banks are applying to the government to be able to provide it, and then that's due to happen in the first week of April. And after that, we should get some clear ideas on how we can apply for it and how it's actually going to impact on individual businesses. So, Kate, that was pretty much all I had. I can go into stuff more in depth if anyone would like, but if not, I'm going to hand over to Jarvis, or if there's any other questions that come up in the meantime, I'm more than happy to answer them.
There is a question there, Sam. If you can we see an example of capitalised interest? Is one of the questions.
Ah, that's a good one. I'm with Abbey. I can't see that. Okay, cool. Capitalised interest. Yeah, good. Right. Okay. So I would. So you know what I would do? I would just. It's funny. I was thinking today about having a specific calculator for that. We don't have one, but if you have, for example, a $50,000 car loan, if you've got a specific example, I'm more than happy to try and do the calculation outside of this. But say if you've got a $50,000 car loan, and they say you're on 5% interest times 0.05. This is this is so basic, but it's not going to be accurate. So the capitalised interest on, say, a $50,000 loan at 5% could be somewhere around $400.
Sure, no worries. There's no other questions that I can see for yourself, Sam.
Okay.
Shall we throw it over to Jarvis?
Yeah, let's do it.
Fantastic.
Thanks, everyone.
Thanks, Sam.
Thanks, Sam. So I'll just share quickly. Okay, can you guys see my screen there?
Yes, we can.
Okay, fantastic. Sorry, I've got 2 screens, so I just need to come over to the correct one. Okay, so look, thanks for the intro there, Sam. Good info there from everyone so far. And I guess, I mean, all of those steps really tie into a business that is viable, can survive, and you're putting in the effort to try and keep it alive or see whether it might be able to return to profitability in the future. So this is probably a little bit of a bigger picture, and the decision is there. Where I come in is really whether we are going to keep going or we're not, and then the options in between those decisions, or to enable those decisions depending on a business's circumstances. So my name's Jarvis Archer. I'm a liquidator. We do personal and company insolvency at Revive. And look, I spend most of my days throughout the whole year talking to people with companies that are in financial distress, like most people, like a lot of small business owners are experiencing at the moment. But obviously we've got a unique set of circumstances at the moment. But really the options and the way to solve the problems are the same all year round. So okay, sorry. So key points I'm just going to cover today are, is your business still solvent? It's important to understand this distinction and continue to keep an eye on it, because your duties change and what you can do and what your responsibilities are change depending on whether you are or aren't solvent. Cover the insolvency law relief that the government introduced on earlier this week in response to the current situation. Have a look at your business circumstances and classifying into really what the options are to deal with those specific circumstances. And then just touch on the benefits of insolvency appointment at the moment. So obviously a last case, a last resort option, but at the same time, I just want to take some of the fear out of it to show the benefits that there are if you really are in a situation where that could be your best option. So is your business still solvent? A business is insolvent if it can't pay its debts as and when they fall due. So it's really that simple. If you've got debts and you can't pay them and you've got no realistic prospect of being able to pay them in the next few weeks, then you're probably insolvent. So what happens for a director is your duties are then owed to the creditors, not just the shareholders as usual. And so you need to act in the creditor's interest, make sure that you're not making things worse for them by continuing to trade on your business. Now, if your company is insolvent or might become insolvent, you need to carefully consider your options, whether you're going to continue trading or whether you're going to call it a day. And if you're going to continue trading, you need to document those decisions, keep your numbers, keep minutes of what you're doing, because if it doesn't work out, you might need to refer to those at some future time, and you want to be able to show that you didn't just trade on blindly with no idea about whether what you're going to do was in the interest of your company and its creditors. And it's important to note that providing financial support to your company, either through finance or if you're doing it personally, or negotiating payment arrangements with the ATO, banks, etc., that can effectively return your company to solvency, where the due dates for payments are adjusted so that they're not due and payable at a particular point in time. So looking at the insolvency law relief that the government introduced earlier this week, first off, statutory demand. So if you owe someone money, they can issue a statutory demand to you, giving you 21 days ordinarily to either pay the debt or you're presumed to be insolvent, and then they can apply to court to have a liquidator appointed in winding up proceedings. Now that 21 days has now been stretched to 6 months. So basically, if you owe someone money and you don't have an expired stat demand already, then they can't do anything essentially for 6 months. So during that time, you've got the ability to pay the debt in full, negotiate a payment arrangement, try and come to some agreement to stop any further proceedings. Similarly for bankruptcy notices, so if a person owes money to someone, then the creditor can issue a bankruptcy notice giving the person 21 days to pay. If they don't pay, they can be made bankrupt at court. That 21-day period for people has been extended to 6 months as well. And then there's something called, it's referred to as an automatic safe harbor. So there's a protection for directors from insolvent trading for 6 months. And what that means is if your company's insolvent, which a lot of companies probably have become insolvent in the last week, as I mentioned there with that definition, then you can be held personally liable as director for all the debts that you incur from that point forward. So if you're worried about insolvent trading, and if you trade a bigger business where maybe the debts you incur each month are millions of dollars, then you don't want to go and put all your personal assets on the line to try and save your company. So there are safe harbour provisions that have been around for a couple of years, which have eligibility and criteria to satisfy that safe harbour protection. There's no eligibility criteria here. So basically, all the debts that a business incurs from 25 March, 25 September, even though the company is insolvent, the director has protection from being held personally liable. So the ATO is withholding enforcement action for that 6-month period, and they also have flexibility to tailor payment arrangements. And then the asset can also provide relief from complying with various provisions under the Corporations Act or regulations. So it's pretty, it's a pretty big relaxation of the laws there. Basically, no one can push you into liquidation for the next 6 months. That said, your landlord, your employees, your suppliers, they still all have the ability to continue or cease working with you depending on the nature and status of your relationship there. So it's not completely plain sailing, but the government's done what they can there to allow businesses to survive. So look, just a little bit of sort of opinion here. So based off that regulation relaxation, I think it's important. There's so much confusion, there's shock the last couple of weeks. I think reality is going to start to set in the next couple of weeks that you still need cash to pay your employees, pay your rent and suppliers to keep going. And if that's not the case, you really need to look at your options. So although there is temporary relief, it's specific and it must be accessed in a proactive manner. So don't just treat the ATO as a bank, even though they are taking a relaxed attitude. And with your bank and your landlord, take those measures that Sam's shown us there, go to your bank proactively, say, hey, need help, wave the white flag, and they'll give it to you. If you ignore any of them, you lose that goodwill and you lose that trust and ability to deal with them in future. So directors, don't exploit the situation or act recklessly just because the pressure's off for 6 months. There's still a range of other directors' duties that apply, and you need to comply with those duties. Otherwise, at the end of the 6 months, the lights will come on, and if you've done the wrong thing, then you're going to be facing some difficulties there, particularly if your company's going to liquidation. So directors can still be held personally liable for unpaid superannuation, PAYG and GST from basically 1 April for GST that's owed to the ATO. So during the period, directors need to make sure they keep lodging on time, engage with the ATO, don't just let it go dormant or be paralysed by not being able to pay the debt. Just lodge, enter into payment arrangements, do what you can to engage with the ATO. The ATO credit reporting defaults is also on foot now for businesses who aren't engaging with the ATO and owe substantial debt. So, and lastly, yeah, directors need to be proactively making decisions about the future of their business. Don't let creditors make it for you. There are a lot of directors that do that anyway, a lot of small business owners that don't want to make the decision that I'm just not going to get through this, things aren't going to get better realistically. You know, we've had such a serious change in the business environment that there's a little bit of an out there for the directors to go, hey, you know, things weren't good already, but now at least I can do it without, you know, being embarrassed. I can blame this situation that everyone else is facing at the moment. So there's a bit of an out there, and some of the people I've spoken to have actually become relieved about what this has offered for them. They can stop trying to keep going with their struggling business. So just briefly, just looking at the business circumstances in a little bit of putting some structure around the crazy situation we find ourselves in. So for some businesses, they've got no or low COVID impact. The business is still viable. Hopefully trading is normal. Some businesses, Zoom, toilet paper companies, who gives a crap, they're skyrocketing. For most other businesses, it's you know, it's still shaky. So key is, as everyone's touched on so far, stabilize that cash flow. Know what your cash flow looks like for the next 13 weeks. Talk to your accountant if you don't have the facilities in-house to have a rolling cash flow forecast. And it can seem scary. It's certainly, for me, it was a bit of an elusive concept for a while, but I think it's because it's so simple. It's really just what are the inflows and what are the outflows, and better cash flow management means more cash in and faster, and outflows slowing them down. And that's what the bank relief, the ATO relief is designed to do there, to slow down those outflows to help you manage that cash flow. So accountants, best person to help every day of the week, and accountants have been busy having discussions with people similarly to what I have throughout the whole year, through the last week, trying to help clients through this. Take the government stimulus into your cash flow management plan, and also any finance that might be available. Probably, I'm not sure what Sam thinks, but I think generally with finance, best to apply early if you think you're going to need it, so that if you do need it, you're kind of ready. It's accessible. Talk to your broker now. I guess that's the key. Now, if you're less fortunate than those few businesses that haven't got too much impact, then you might have some significant impact, but your business may still return to viability in the future. So the key is here, well, can we ride this out indefinitely until things return to normal? And so really the options are close up or operate on minimal resources indefinitely. I've got someone I'm speaking to that has a QBCC license. If they appoint me, that license is gone. So what they're doing is dropping down to minimal resources and hanging around to see what happens. And look, hopefully things pick up and their business will be able to pick up. They maintain that QBCC license for the time being. Locate and develop a new income source. You're going to need to do that. And I've seen some really great examples of restaurants turning to catering, home delivery, other business using the facilities they have to develop something that they can provide. Breweries producing hand sanitizer. Amazing. So the key is there, okay, you do that, but you're still probably going to have a bunch of debts as of last week that you're unable to pay. So you might have to look at some restructuring option, and there's informal options where you're just talking to people, or there's formal options where you're appointing someone like me, a liquidator, to be an independent professional to take control of the company, deal with its creditors, give some structure and some confidence to all the stakeholders and deal with them collectively. Say, this is the plan and this is what's going to happen. If unfortunately you're one of the businesses that's just been hit really hard and it's just not viable to continue, closing down's the option. The best thing to do is to do it soon. Don't keep racking up wages to employees that you don't think you'll be able to pay, debts to suppliers you can't pay, tax debt, bank debt, your accountant's bill. Make sure you can pay everyone, or if you can't, call it a day and look on to finding new employment. That's really the option for the directors to keep covering their personal expenses. So, okay, you fall into one of those buckets. So then you go, okay, well, what am I going to do? Like my situation, I think I could save it. So informal negotiations, it's really just doing what Sam said, doing what Abbey said, talk to your employees, work out some arrangements, talk to your bank, get Kate to contact the ATO, work out payment arrangements, and talk to your suppliers about terms there for them to continue supplying. You need everyone on side if you're going to get through it. Professionals are the best to assist. Your brokers, accountant, lawyer, or if an insolvency professional can help as well, because we deal with this situation every day. There's nothing new to us here. It's just a more serious set of circumstances, and it's come on in a bit of a tidal wave. Now, okay, if you can't work things out informally, just doing deals and working things out through negotiation, then there's a formal appointment to try and save your business or wind it down in an orderly fashion, and that's called a voluntary administration, where it lasts for about 5 weeks, and then creditors vote on your proposal to for a deed of company arrangement. And what that is, it says, hey, can't pay all my debts, but I can keep going if we squash them down to 20 cents in the dollar or some smaller amount, and we make payments over a year, 2 years. So something that's affordable. And lastly, if we're just wrapping it up, liquidation's the key. It is relatively cheap. We do them for $5,500 up front, and it means that you can step back as a director. You don't have to stress about trying to deal with everything. You can hand over to someone who takes that weight off your shoulders, deals with all the people. You don't have to face up to everyone. Someone like me does that for you. So just looking quickly at the benefits of appointing now for an administration or a deed of company arrangement. Now, no, you know, I'm speaking to people that they've got massive tax debts. They should have appointed me anytime in the last 6 weeks. And the ATO said to them, oh, well, you don't have to pay anything for 6 months. So they've just gone, okay, well, no worries. I'll just let that massive ATO debt sit there. And I tend to think it's probably not the best way forward. I know it's tempting, but I think that you know in the back of your mind that you're going to have to deal with that at some point. So you don't want to go and do all this good work, surviving this period, and then in 6 months you go, okay, well, you know, now I'll get the creditors to, formalise this situation, write off their debts now. At that time, they might be sort of going, well, you know, you had 6 months to come to us and you haven't, and you may have lost that goodwill there that you have now, that level of understanding and empathy that you might get from creditors, and I think particularly the ATO. So a DOCA, a deed of company arrangement, referred to as a DOCA, it aims to reduce your debts to a minimal level, and after sort of about 5 weeks, 3 to 5 weeks, returns control to the directors. So all your debts are caught in that DOCA. All you have to pay is what you've proposed to pay, which could be a lump sum through some new finance or instalments over time from profits. It binds all unsecured creditors. So if you're dealing with a number of unsecured creditors in negotiations, but someone's just being really difficult, the DOCA, if accepted, binds everyone. So even if they vote against it, as long as you get the numbers, which is really a majority of number and a majority of value of creditors voting at a meeting to consider your proposal, it gets through, and everyone's a party to it. It deals with creditors collectively rather than negotiating individually. There's something called a holding DOCA, which is a bit of a relatively new thing, but because we're in such uncertain times, it could be really applicable. What that does is says, okay, guys, it's crazy times. We think this business is going to survive. It's got some assets. It's got a viable business. Appoint an administrator, go through that 3 to 5 week administration period where a holding DOCA is proposed. And if accepted by creditors, it's really saying, look, we need 6 months just to work through this. And then we'll come back to creditors with what our real proposal is there, whether we pay that 20 cents in the dollar, whether we can pay 100 cents in the dollar. Whatever that is, it's really just buying time. And the beauty is you don't have someone like me running your business for that whole 6 month period or 3 month period. After the 3 to 5 weeks, control goes back to the directors. And so, yes, there's some obligations for me as the deed administrator if I was appointed to report to creditors, make sure that the company's not blowing out and racking up debts and really actually making things worse. But it could be really become a popular option. I think probably for bigger companies within the millions of dollars of turnover where things will get better, but for the moment they just don't know what they can propose to creditors, and they aren't able to individually negotiate with every single creditor to sort of hold fire. So I expect at the moment the ATO and other creditors are going to be more supportive of proactive steps as well. Often the ATO is viewed as someone that will say no to a lot of proposals. They've got the public interest factor. And so if there's been a company that's racked up $500,000 worth of tax debt, the ATO is kind of a bit hesitant to go, oh, yeah, no, we'll give you a second go. So I think at the moment, given the measures, you might be more likely to get a yes from them. You don't want the current efforts to be undone in 3 to 6 months if creditors are less supportive then. So I sort of think hand in hand with what you're doing, if you see some light at the end of the tunnel, formalizing it all now to make sure there's no hiccups down the line is smart play. So then if you're not continuing, you just need it wrapped up. Benefits appointing a liquidator now. So the government stimulus, it's not going to save a business that was already struggling. It's there to help good businesses try to get through and survive. If you appoint, so directors shouldn't feel the need to try and carry on a business that can't realistically be saved. The idea of the business, it's to make money. If your company can't make money and it's not realistically going to, then the best decision is really to stop trading and making sure you don't worsen the position for everyone involved. Business owners still have a duty to not act irresponsibly and cause detriment to employees, other business owners, banks, the ATO, and ultimately to yourself, who might be liable for everything. Now, liquidation has the beauty of accessing a government scheme called FEG, Fair Entitlements Guarantee. It pays all employee entitlements except for super. So that leave bill, it doesn't, sick leave isn't an entitlement that is covered, but annual leave, wages, pay in lieu of notice, redundancy, government covers it all, 100 cents to the dollar, and really it can happen within a matter of weeks up to a couple of months. So that is a real benefit of appointing a liquidator sooner rather than later to make sure your employees get looked after. Now, although there's no civil liability for insolvent trading, if someone is out there recklessly operating, racking up debts, that can come back to bite them if their company does enter into liquidation later, and there could be some asset prosecution. So it just ties in with before. Be smart. Don't just go and take advantage of the situation. If your company can't meet its ongoing expenses, you're going to have increased debts under personal guarantees to landlords, suppliers, financiers, and that increases the risk of director insolvency and bankruptcy, and potentially losing your house. So I think at the moment there's certainly options if you are facing liability for company debts to negotiate through it and avoid bankruptcy and try to crash land a situation as opposed to let it all crumble into a mess. So it's an opportunity to bow out with greater ability to negotiate settlements, like I was saying. And if you keep going on, you can't pay people, you make promises, see it regularly with businesses that are struggling, you just lose the confidence and trust of the people you worked with potentially for a long time, for years, and your reputation really suffers, which if you're trying to get back into the same industry, it can be a problem. So yeah, so ATO can issue direct penalty notices. I think I mentioned before, superannuation, PAYG and GST, directors can be held personally liable. While the ATO have said we'll hold off for 6 months, I feel like if you're not engaging, you're not really able to pay, and then in 6 months you go, oh, we might liquidate now, you're going to be on the ATO's radar. There's going to be a lot of businesses with tax debts within 6 months. And look, I don't expect the ATO to come in a giant wave and clean everything out. But I feel like if you're proactive, there's less likelihood of the ATO looking to make a director personally liable for their company's debts. And if you do go into liquidation, but you think, oh, look, I could buy these assets and go off and probably try and make something of the business in a smaller frame to suit the level of revenue that it's generating now, then by all means, you can buy assets off a liquidator. Feedback from my auctioneers is it's pretty tough to sell assets now. I took a significant discount on a car that we were selling a couple of days ago, and they said, offers to buy other cars in their auctions are really being withdrawn. So if you do want to buy a car and you've got a little bit of money, next couple of months could be a good time. So, and avoid, I've just said there, avoid legal Phoenix activity. Don't go and just set up a new company, transfer the assets across. That will catch up with you. Your old company will go into liquidation, and there's serious consequences. ASIC are really cracking down on that. That's me, I'm done. So, I know there's a fair bit of information to take in there, but happy to answer any questions.
Thanks, Jarvis. Just going to jump in there, if you can hear me.
Yep.
Yep. So we've actually got a couple of questions that have come through. So if you don't mind, we'll just run through those quickly. We had a question come through from Andrew just earlier. No?
Yeah, so is this for debts prior to the 12th or new debts? So that's, yes. I take it that's probably the insolvent trading protection. So that's for debts from when the law was introduced, I think 25 March until 25 September. So everything before that, yes, look, if your company was insolvent, then yes, you could be held personally liable for those debts. I guess if most companies, you'd hope were trading solvently, they were going pretty well until they had the disruption caused by the recent circumstances. So protections just from new debts forward. And then Jody had a question there.
Jody, if you want to just send through some additional information there for Jarvis, if you just want to add another question on there, yeah, let us know. Otherwise, there is also another question just in the chat box there, Jarvis. I don't know if you can see that one. If you just go down to the bottom of your screen and click chat, there's just another question just in there.
Here we go. One sec. It's actually up the top here somewhere. Okay, here we go. So, okay, cool. So from Stuart, yeah, preparing cash flow forecast for a commercial electrical contractor for example, may be a challenge. Aside from the sensitive conversations with clients, debtors, employees and creditors, timing of the ins and outs might be a tough bit for them to estimate, right? Yeah, well, of course. I mean, cash flow forecast, every forecast is based on assumptions. So Stuart, I know you would probably be better, more familiar with preparing them than I, and certainly your accounting team, you'd be familiar with them, and certainly at the moment it's hard to predict. So really it may be that you're just producing them, you know, day by day, week by week, to see whether you're going to get through. But I think largely you're going to be able to predict whether you've got some income coming or whether you've got no income, and if you do have some, whether that's going to be anywhere near enough. So I guess the key is, I sort of feel like the government should have done this with, you know, some of the measures, but everyone's got their own view. But I think, you know, cut deep, cut early in terms of your expenses. Very difficult, but it's better to have some jobs than no jobs in your business. I guess that's the key.
Excellent. Thanks, Jarvis. And Jodie's just shot through some more information just in the Q&A window. If you can just jump back into that one there. She's just requesting if you offer consults to clients to decide if they should liquidate.
Yeah, of course. So Jodie, I spend probably 3 to 4 hours a day talking to people, no charge, just really talking about their situation, distilling down what they want to do and what they think the prospects are of their business surviving, and then you know, helping them decide whether I'm the right person for them, but also work with a network of finance brokers. I think HR people are going to be very important at the moment. Lawyers, restructuring people, or getting involved with your accountant. So my contact details are there on the screen now. Easily able to get them on LinkedIn or around as well. So, so they disagree. So I actually have a template email that might help you talk to them. And I'll write an article probably very shortly with some of those points there that I mentioned about, hey, don't be scared, be courageous, and if you aren't realistically going to be able to move forward with your company and make money, you know, do the right thing now. So yeah, Jodie, happy to get in touch, and I'm on LinkedIn. My mobile number's there. That's the best one for me, 0478 823 220.
Beautiful. I think that wraps it all up for yourself, Jarvis.
Okay.
Thank you very much for your time there. It doesn't look like we've got any other queries, but if anyone has any additional queries for Jarvis or any of the other panelists, feel free to shoot them through the Q&A box or the chat window there. Otherwise, all our details will be available in the webinar as well, so you can always just check in through there as well. And yeah, just get in contact with whoever you need. But before the webinar is finished, we have a couple of extra questions just come through for myself and Zoe here. So Jarvis, I might just get you to stop screen sharing if that's okay. Beautiful, it should take over. Beautiful, excellent. So that's come through now. Thank you for that, Jarvis. So we've just had a couple of questions that we've had just before the webinar here and just during the webinar. So I'm just going to run through those quickly, then hand over to Zoe and Kate just to wrap everything up for us. So we had a question come through just in regards to some of the concessions with the pay-as-you-go withholding. So the question was, if an employee is brought on after the 12th of March cutoff for the ABN being active, if they're still eligible for the employer concession. So as it stands, you're only required to have an active ABN before March 12th to be eligible for the employer concessions. That's that 10K minimum repayment that Kate mentioned earlier. So as long as you have your ABN before the 12th of March, then you are still eligible for those concessions. So you just need to make sure that you were registered before that point, and then it'll just go through your January to March BAS and you will still be eligible. So as long as you actually have the employer, it's not some different scheme that's come up, it is just a legitimate claim, then the ATO has absolutely no issue with paying out those additional concessions. So looks like you're just a bit worried just about when the employee was brought on, so don't stress at all. As long as you just registered for pay-as-you-go withholding, you won't have any issues there. And the second question we've got there, if you've been forced to shut down / stand down your employees, are you still eligible for the employer concessions? So in that instance, at this stage, the ATO has advised us that you will continue to be eligible for the stimulus concessions. even if you are forced to shut down or stand down, so in the instances of the non-essential services, you are still eligible for the concessions as long as you're an active eligible employer. So what that means is as long as you're registered as an active ABN holder, you will still be eligible for those concessions. So we're still waiting for sort of some confirmation from through the stimulus, but at this stage, you are eligible for those concessions. So that all just roll through your BAS. So just keep track of that, and we'll go over that in more detail through our newsletters and the like as the stimulus gets updated. So Zoe will just touch base on that a little bit further now. So I'll just hand over to herself. Thank you, Zoe.
All right, can you hear me? So another question that we have been having a lot is, are there going to be any additional concessions or funding for businesses that have been considered non-essential and are forced to close? So at this stage, there are no additional concessions. However, today, Scott Morrison announced that a third stimulus package will be released within the coming days. So this is going to be targeted at businesses who are forced to close their doors. We're not sure of the exact details of what this means, but as soon as we know, we're going to be releasing newsletters and posting to our social media. So that's it for today. So I'd like to thank you for taking the time to listen in, and hopefully we've provided some clarity and some reliable information to help you make decisions going forward. I would like to say a massive thank you to Kate, Sam, Abbey and Jarvis for donating their time and knowledge to this webinar today. So now I'm going to hand it back to Kate just for a final wrap up.
How'd you go with all that information, everyone? There was a little bit to take in there. So we are going to allow you to watch this on the rewatch. I'm just wondering if it's still Zoe that's showing on myself. No, it's myself. So you will be able to rewatch, and I'll put in some timeframes of when every speaker was speaking so that you can jump forward to the section that's appropriate to yourself. I can just see a question here for myself, I believe. When can we submit our BAS? So BAS lodgements are the same as usual. So BAS will finish for the current quarter/month at the end of this month. And then to be eligible for the PAYG credits there, that will start being processed from April the 28th. So BAS lodgements are as usual, and from the 28th, you'll be able to see those credits. So all we ask is that you have all your bookkeeping up to date by the 31st of March, and we will continue working on that as soon as possible to ensure that you'll get those refunds there, well, credits there as well. So again, I wanted to say a big thank you to everyone for making this happen. This is our first webinar that we've ever done. This is a first timer for a lot of Zoom in the webinar with a lot of the participants and for the hosts as well. I actually haven't met the hosts in flesh before, so thank you again for your time. I know, especially for the Queenslanders, this is definitely right in the middle of lunchtime, and everyone else has some children that are probably running around on the side. So thank you so much, and for Dylan and Zoe for staying back. They've donated their time as well. If you've got any questions or you found this useful, we would love to know. There may be a possibility of future webinars if this has been helpful for yourselves. So hope you have a great evening. I did promise that I would let you know what is going to come after this. So again, there may be other webinars, but for anyone that has been watching this, we will be able to send you a bit of a summary and a checklist that you can take home and, you know, tick it off and make sure that you're walking through the right steps to get you where you want to be going. So again, thank you everyone. Have a great evening, as great as it can be right now. Have some you time over the weekend, spend time with friends and family via Zoom chats, and get creative. Maybe you'll create a TikTok. All right, thanks guys. See you later.
Thanks,
Yeah,
guys.
we'll be on the cards.